I'm Andrew Murphy, Co-Chief Investment Officer at Winthrop Wealth, and welcome to our 2024 Market Review and Outlook. Today I'll recap key events in the financial markets, including the S&P 500 producing its first back-to-back 25% annual return since the late 1990s, and the bond market generating slightly positive returns despite an increase in interest rates. And then I'll go over our short-term outlook and our long-term investment philosophy moving forward. Please visit our website at winthropwealth.com to view the full written version and to learn more about our total net worth approach to wealth management, which combines both comprehensive financial planning and investment management. The U.S. equity market had another strong year, with the S&P 500 increasing by 25%. This marked the first time since 1998 to 1999 that the S&P posted a 25% gain for 2 consecutive years. The market set 57 new record highs during the year, and volatility was noticeably muted, as the largest price decline was only 8.5%. The Magnificent Seven stocks, which are mainly considered large-cap growth stocks and the leaders in AI, had another year of spectacular performance. Together, they contributed over 50% of the S&P 500's annual return. These stocks helped drive growth over value and large caps over mid and small. As we've discussed before, our view is that diversified portfolios can lead to more consistent and less volatile results in a single asset class. In our managed portfolios, we have exposure to the Magnificent Seven stocks, but we also have holdings in other asset classes so that we are prepared when the market inevitably shifts. Short-term and long-term treasury yields diverged throughout the year. Short-term treasury yields started the year above 5%, but they declined to the low 4s once the Fed began to lower the federal funds rate in September. We expect short-term yields to continue moving lower as the Fed's latest summary of economic projections indicate they will lower rates toward 3% over the next few years. Long-term treasury yields were volatile throughout the year, but began rising as investors anticipated that Federal Reserve rate cuts and President Trump's expected policies will lead to both higher economic growth and inflation. 10-year ended the year higher by about 70 basis points to 4.57%. Despite the rise in the 10-year, the Bloomberg Aggregate Bond Index gained 1.3%. After challenging years in 2021 and 2022 and tepid results this year, we continue to recommend a patient approach for intermediate-term bonds. And we believe they are still an attractive investment opportunity, as the yield to maturity on the Ag Bond Index is now 4.9%. Our short-term outlook continues to be cautious, as the stock market has increased by over 70% since the start of the bull market in 2022, with very little volatility. We know that market declines are common. And right now, it is easy to notice signs of froth. During these times, many investors are fooled into thinking that markets will continue to rise indefinitely, leading them to take on too much risk. We suggest maintaining composure and using this period as an opportunity to take profits and maintain allocations near target levels. And while we would be thrilled with another year of exceptional performance, we want to maintain realistic expectations, as we suspect the ride will get bumpier from here. Our long-term investment philosophy is based on the benefits of staying disciplined, opportunistic, and diversified, while striving to mitigate fees, taxes, and expenses. In our opinion, adhering to a structured process and executing on these components should help keep our clients on track toward pursuing their long-term objectives. Please visit our website at winthropwealth.com to view all of our market commentaries and updates, and for details on our total net worth approach to wealth management.